Okay, well, lots of stocks here, which we will talk about. Dean Kim is head of global research product at William O'Neill and Companies with us. Dean, great to have you with us here. Thank you very much. And let's talk stocks. What else, right? I mean, it's a market for all kinds of stocks. And, so just a quick word on the Nifty. I think we've taken out the earlier highs. I was sort of putting numbers, which is the daily upper Bollinger Band, which gets us to about 24,566 straight away. I mean, if you want to look at targets, etc. I mean, your thoughts there. And then stocks. And let's start with power names there. PFC, REC, IREDA, and a whole bunch of names there in the power sort of ecosystem. Go on, Dean.
Yeah, in terms of I look at the sensex, all-time high at the moment, very strong breakout. When I look at Indian earnings overall, if I look at sensex earnings, we're at 4,000. And, if you put a 20 multiple on it, target would suggest 80,000, and we're almost there. However, market always looks forward. And when we look at the next fiscal year, we're at 4,300, which is about 8-9% higher. So it wouldn't be unreasonable to expect high single-digit performance going forward. There's a lot of good things happening at the moment in India. Oil prices pretty stable. U.S. dollar is pretty stable. Overall, the emerging markets are performing well. And on top of that, you have a lot of demand for Indian bonds now as part of the JP Morgan Emerging Market Global Index. So that's going to have a trickle-down effect in terms of lowering yields for India. That's going to improve the cost of borrowing for companies. And that's going to translate into higher business activity and potentially higher earnings for next fiscal year. So on the back of that, the market continues to widen in terms of breadth. You mentioned some power names. The one I see is CESC as part of utilities, very good breakout. But besides that, there's a lot of other names like basic material, cap equipment, consumers, financials, and so on. So breadth is pretty wide.
Dean, hi. Great to have you on the show. I want to ask you straight away about banks because we've got these big moves that have finally begun. And I remember our last conversation, I think, if I remember correctly, you were looking out for the 1,600 level on HDFC Bank. Now, stocks moved above that. Lots going on over here. So in terms of banks, what would your top trades be here? Yeah,
I think my top pick would be HDFC Bank. Clear breakout from a long base, very powerful breakout. When you look at HDFC's earnings for this year, it's sort of single digits, but then you look at the next fiscal year, it's going to grow 20%, which is back to their normal sort of trajectory in terms of earnings growth. And like I mentioned, India has one of the highest GDP growth rates expected amongst sort of larger economies. And you factor on top of that yields coming down, cost of borrowing is going to come down, and that's going to lead to more demand for loans in the economy. And I think HDFC is in a really good spot to benefit from that. Then you have other private sector banks. Of course, ICICI is the bid extended. IndusInd Bank is making improvement, and then Kotak Mahindra. That one is almost ready to break out from sort of a double bottom base. So we're keeping an eye on that one. And Federal Bank has already broken out and performing well. So really, I think it's the larger cap bank that's going to benefit going forward.
All right. Hi, Dean. Good morning. The only fly in the ointment is these Brent crude prices. They were well behaved at around $80 per barrel. Suddenly, Brent is moving closer to around $87, $88 per barrel. What's your view on that? As you said earlier, I think that you believe it's still well behaved, but that's ticking up. And we saw the big drawdown in inventories overnight. It appears demand is coming back as well. Your view?
Yeah, I look at the NYMEX price. Right now, we're at 83 or so. There is resistance at around 84, which is a recent high. for NYMEX. And after that, there is a gap to 87. Should it come down, there is some support at 82, which is the rising 10-day moving average. But I think we'll have to see how it goes. I think a lot depends on where inventories are. From my last review, I think inventories were fairly high, but that may start to dwindle or deplete. So I think we have to keep a close eye on oil.
Okay, all right. Thanks very much for joining in, and it's great getting that perspective from you, Dean.